Good morning, good afternoon, good evening, wherever you may be. This is Sid from Elliott Wave Plus, and this is the March 1 of 2020 edition of my weekly counts webinar, where I go over all of my Elliott Wave counts and associated Fibonacci price targets for many of the world's major stock markets, commodities, currencies, and bonds. Hurst cycle analysis, as well as a number of other forms of technical analysis, will also be considered on virtually all items. There at my site under resources. And by the way, don't forget, in the resources, there's a lot of good stuff in here. If you are new to the service, I have a number of new people this week. Nothing like a flash crash to renew interest in the markets. But there's a number of blogs in, actually, this isn't the blogs. This is the educational materials. These are videos here. There's a really good old video I did called Sid's Elliott Wave 101. There's an introduction to how I use Hurst cycle analysis, and that's where a lot of traditional Elliotticians get lost when I'm talking on the website. I talk a lot about Hurst, and that's a lot of people are quite familiar with Elliott, but Hurst is new to them, and so be aware of the guides as well. There's a number of guides in here, and the one, if you're looking at the Hurst and you don't understand it, go to guide number 1, our chart notations, a guide for Elliott Wave Plus subscribers. And I talk in here about different things and the way I notate them on the charts. I start with the Elliott Wave stuff first, but then I get into trend channels, Fibonacci, how I draw them. And then there's a section in here about Hurst cycle analysis, where I give an introductory look so you can at least understand what's going on. And it talks about the different cycles and how they work together, how they overlap and combine to influence price movement. An example, a screenshot of what an analysis looks like on Sentient Trader software, which I use. And it's the idea of phasing and how that's developed. And I wrote quite a bit about it in here, and then how I basically utilize it to determine, and combine it with Elliott Wave in order to determine if, for instance, a correction is over or it's going to extend, the most likely direction for movement next. And so there's quite an extensive article that I've written back in here that. And I think it'd be a really good refresher, and it's the very first guide I wrote when we developed the new website a few years ago. Our chart notations, a guide, so it tells you a lot about Hurst in there, and then how I apply the Hurst analysis on top of the Elliott Wave charts. So that's an important thing. And then Connect is very quickly all of my most recent Twitter, YouTube, and posts, and then also in the blog section. And I think there's been several really good blog posts I've done free for everyone, and have posted at my site recently. Here's one, and really going back about the last six of them or so. When the stock market goes down, gold goes up, right? Well, we found out that is not correct. And then my claim in this web post or this blog post was that they are not necessarily always oppositely correlated. So that was very important. It's certainly important last week. as we saw gold and the stock market going down together. And then pointed out that there was a big Dow theory non-confirmation in place where the Dow was making a new high, a Dow Industrials, but the high from mid-2018 was still standing on the transports, and that was bad news for the markets. And then the one after that, see Jan 27, Feb 11, Feb 14, showed all the massive divergences that were bearish divergences that were showing on every time frame in the MACD indicator, going all the way to quarterly chart, monthly, weekly, all the way down to 60-minute. And then the next one was showing how gold, bonds, the stock market, and the U.S. dollar were all moving up together, and that was unsustainable. And this one is who could have predicted this huge down move in the market? And it shows actual screenshots that I provided to you and as a paying subscriber along the way. This is one from, let's see if I can, anyway, it was showing that I was calling for a significant top and that some major Fibonacci targets had been hit. And that was from the February 19 edition of screenshots. Here's a screenshot that I showed at the February 23 webinar, showing that I was labeling the top as in on the S&P on February 19th, and I was expecting aggressive downward movement, and I talked in that webinar, and there were some questions that came up in the webinar about, man, Sid, that is a really fast and big plunge you're counting for. That would be thousands of Dow points. Are you calling for, if so, are you calling for a flash crash? And we talked some about the flash crash in that webinar. And that, that's exactly what I was calling for. It was a really aggressive and steep, fast move down. Remember that in Elliott wave, we really don't have any surefire targets for the end of a wave one, but a real typical one would be to the wave four of one lesser degree. As a matter of fact, that's just about the only real target you have. If you're looking at a major trend change, you're looking for a target for the end of wave one. So on the S&P, that was at 3070. Well, it turns out it went even further than that. And so that screenshot was from February 23, and then on February 26, it showed that it had nearly already reached that target of 3070 in the matter of just a few days. And matter of fact, the very opening paragraph really tells it. On November 15th of 2019, the S&P reached 3120 for the first time ever. For the next 63 trading days, it moved continuously, relentlessly higher. And we knew it was a thrust out of a triangle, and we knew that it was extending. It was a pretty long one. And it was traveling within a very narrow channel. And then in just 4 days after the February 19 high of 33.93, the S&P was back down to the November 15 level. That's just unbelievable. That is just incredible. That really is a flash crash. And Elliottians, they won't provide you a forward roadmap with dates and targets. They just count the waves historically, and they don't even show you any arrows or dates after from what's expected afterwards. And it's in a way, I'm really quite unique in that way, being very specific about what I think is going to move forward. And it's a little risky because it's really stepping out there with a bold prediction. It's of course, it never works out exactly perfectly that way. It's super rare when it does. Remember how also I'm mentioning lately that and that sometimes when you are in a final thrust out of a triangle, that the thrust will be completely retraced, sometimes even faster than the thrust out of the triangle. And that is exactly to the tick what has happened, and it happened almost a straight line. Just a historic week, amazing week to watch develop. So, and then I think there was, one more blog post after that that I'd like for you to be aware of, and that is it's about how well our nightly Algo reports are doing on a specific item. This would be the ZN contract for bonds, and it really discusses it in depth. And you can see it caught this entire move to the upside. And the ZN contract it's pretty easy to trade. It doesn't take a big account. You can trade big on it if you want to, if you have a big account. But you can see the size of the winners. There's the big green blobs. These are winning trades, and every one of these signals went out that night. So on you can look back, Jan 21, there was a buy signal. And I keep my history at my side. So I don't hide from my history. This is another thing completely unique, I think, about my service. I leave it up there, and I acknowledge that it's no way anybody can do this perfectly. There's just no way. But I'm not going to hide from my prior calls. This is one thing I've noticed from some of my major competitors is they don't leave their history up there very long. And so, it's hard, unless you've been a constant subscriber, it's hard to go back and see whether they've been right or not. So I own when I'm wrong, and I own when I'm right. And I own when I'm close, which is probably more often than not what it is. So this one's done really well. And I got to say, the volatility this week smoked the market. I mean, it was literally like a bomb went off in the markets. And the volatility just exploded. And in many items, like the signals, I'll show them to you this week, they got stopped out because the volatility they were right. They got in on the momentum, but then there was a big enough wick that they got stopped. And that happened on a lot of the stock market items, not all of them. The one item is my TZA Algo. That was the 3 times bearish Russell, and that was the one that I was pointing out as probably the best opportunity to short the markets. That one did not get stopped out and did well. So nothing's perfect. Even a computer that's automatically trading the markets based on momentum, it's not perfect. If the volatility gets high enough, intraday volatility, you can have swings that are so big it would stop out. Unless you were using incredibly large stop, it would stop out an item and not allow it to grab the entire move. But at least on the bond side, a little better behavior there, and a big move and a big winner. And we talk about that on that blog post. So let's get on with the wave counting.